Hey everyone, welcome back to Bold FX Academy. Today we're going to dive into market structure. I'm excited to share this knowledge with you, and I'm confident that by the end of this lesson, you will have a better understanding of market structure, right? If you have missed our previous lesson on Introduction to Forex Trading, don't worry. You can always catch up by looking at the replay on our channel. But for those who did join us, I hope you found the information helpful. Today we're going to build on that foundation and explore market structure. All right, so let's get started. So basic market structure. We're mainly going to focus on bullish and bearish market structure. So, a bullish market, which is simply an uptrend, price make higher highs and higher lows. In a bearish market, which is a downtrend, price make lower highs and lower lows. Higher lows and lower highs unconfirmed until there is a break of structure. Swing high is the highest point that leads to a swing low. And a swing low is the lowest point that leads to the swing high. So a break of structure is simply a break of a swing structure, right? Either a break of a swing low or a break of a swing high. So after a break of structure, expect the price to pull back on that time frame. So this is simply what I meant in the previous slide is that in a bullish market, price is simply making a series of higher highs and higher lows. So as I indicated that a swing high, this is simply the highest point, which is, let me just mark it out, which is simply the highest point, which is the highest point that leads which is the highest point that leads to the swing low. And a swing low is the lowest point that leads to a swing high, right? As you can see, this swing high led to a swing low followed by a swing high. As I indicated that a break of structure is simply confirmed by a higher lows and lower highs aren't confirmed until there is a break of structure. So, which means that there needs to be a structural break for it to confirm that this is a break of structure. So, in a downtrend, price is making a series of lower lows and lower highs, right? So this is your swing low right now, and this is your swing high. Oh, sorry about that. This is your swing high, right? And this is your break of structure, which confirms that a swing structure has been broken. So moving on to the next slide. Strong and weak highs or lows. Strong highs, lows break the structure. Weak highs or lows fail to break structure. Strong lows are lows that leads to higher highs. Strong highs are highs that lead to lower lows. Strong highs and lows typically form after a sharp move or large candles. Big players in the market aim to protect these strong swing points. So the goal is to focus on catching higher lows and lower highs for continuations and target higher highs and lower lows for weak structure. In other words, you follow the trend, right? Let's look at how that looks like. So just remember that strong highs or lows break structure. So now that you know how to identify market structure, right? Now you know that in an uptrend, strong highs breaks as presented in the previous slide. Strong highs break the structure. Weak highs fail to break the structure. So how do you identify a strong high right now? To identify a strong high, you need to identify a break of structure. That then identifies that this is now a strong high because it broke structure, right? It is a strong high because it broke structure. So how then now do we know that a higher high is weak? Simply because it doesn't break our previous high or our previous structure, as indicated right here. So this is a strong high because it broke structure, right? This is a weak high because it did not break any structure, right? So that is how you identify strong highs and strong lows. In a downtrend, your lower high is basically your strong lows because it broke structure, right? Your lower lows is your weak lows, which is what you target because it does not break structure. It fails to break structure. It will only become a strong structure once it breaks structure. As an example, this price is forming a higher high, higher low, higher high, higher low, higher high, then breaks structure. Now right here you get your break of structure, and then now you can confidently say that this right here is a strong high. All right, I hope that has made sense. Moving on to the next slide. Trend change. A trend change happens. Just give me a sec. A trend change happens when the usual market flow doesn't work as expected. In a bullish trend, we expect the price to keep making higher highs and higher lows. In a bearish trend, we expect the price to keep making lower highs and lower lows. So a bullish trend change, right? A bullish trend change. This happens when the price breaks a lower high to make a higher high. So a bearish trend change. This happens when the price breaks a higher low to make a lower low. Let's see how that looks like in the market. So this is simply how you're gonna identify a bullish trend change and a bearish trend change. The market is making a series of higher highs, and then right here you have a bearish trend, a bullish trend change, right? Which goes back to the previous slide. A bullish trend change, this happens when the price breaks lower highs to make higher highs. So this is a bearish trend change. Sorry, that was my mistake, right? So here in this example, we have a bearish trend change because price broke a strong higher low right there. And remember now, when you identify an uptrend, your expectation is that the higher low is gonna hold, right? Because it's a strong swing structure because it broke structure, right? So what you expect now is that this higher low is going to hold. So after this higher high, price comes back and breaks structure. Remember, after a break of structure, a new trend is being formed. So after a break of structure, or after a break of a strong swing structure, uh, uh, after a break of a strong swing structure, a new strong structure is being formed, or a new trend is being formed, right? So as you can see right here, price has printed a series of higher highs right there. So right there, then right here, after this higher high right here, price forms a lower low, which is a bearish trend change. Followed by a lower high, price gives another break of structure, making this lower high your strong swing structure, right? It breaks structure, forming a lower low. Forming a lower low right there. Price created another lower high, creating a lower low, then breaks your strong your strong your strong swing structure, creating a higher high. This is what we call a bullish trend change, price changing from a bearish market to a bullish market. I hope that has made sense. So if you do get stuck, right, what I normally do is I identify my structure. So let's take this strong structure for an example, this strong higher low. I would mark it down, and as soon as price breaks structure, it forms a new range, meaning that this is my strong higher low because it has broken structure, right? It has created a break of structure. So what I would do is I would mark this out as my strong higher low and this as my weak higher high. So once price breaks this high, I now know that I move my trend line to this higher low. So then in that way I can manage to actually uh, keep keep a good record of where the market is moving or when the market is changing from a bullish trend to a bearish trend or vice versa. All right, so as you can see, as I would have marked out this as my weak and this as my strong, price came down and broke structure, changing a bullish trend to a bearish trend, forming a lower low, then creating a lower high. So what happens right here, this higher high becomes a strong structure, and then this low becomes a weak structure. So you are working within this range, right? And that's how you can identify your bullish trend changes, keeping a record of your strong points and your weak swing structure and your strong swing structure. So moving on, this is how it looks in the real market. It's not always as simple as this, but this is just an example to give you guys or to give you guys a clear idea of how to identify market structure in the real market. As you can see here, this was your strong high. This was your strong structure, and this was your weak swing structure. This was your strong swing structure. So price broke this high, creating a break of structure, which confirms that this now is a strong higher low, and we do not expect the market to break this higher low. So what happens is that price breaks that structures, pulls back to an area of demand, which you will learn about in the next coming videos. So price creates a pullback and then breaks your higher high. So the only time, as you can remember in the previous slides, let me take you guys quickly back. In the previous slides, you can see that swing highs are the highest point that leads to a break of structure, right? So higher lows and lower highs unconfirmed until there is a break of structure. So as soon as you get a break of structure, this now confirms that there's a structural break. as you can see here. So if you have kept, as I've said, if you have kept a record of your strong and your weak structure, you would easily so identify when the trend is changing, right? When it is changing from a bullish trend to a bearish trend. So right here, after your strong higher low has formed and your higher high has formed, or you have identified your higher high, now you can see that the market went up, took out your previous higher high, forming a new higher high, then broke structure to the downside, taking out your strong structure, changing your bullish trend to a bearish trend. So as you can see right here, price then forms a lower low because it is lower than the previous high. So it creates a lower low followed by a lower high. And then you get a break of structure. Price breaks your lower low, creating a break of structure, which confirms that that you are now in a downtrend, right? Which confirms that you are now in a downtrend. So after that, price creates a lower low, and then takes out your lower high. So what happens here is that then now price changes from a bearish trend to a bullish trend. So if you are marking out your strong swing structure and your weak swing structure, you can see that price did not break this low. So now this low becomes your strong swing structure, because why? It broke structure, right? So now this confirms that price is changing from a bearish trend to a bullish trend. So there are three types of structure. You get the swing, you get the internal, and then you get the fractal structure. A swing structure simply leads to a break of structure, a candle body close. And then you get the internal structure, which is the IBOS, also identified through a candle body close. Then you get the fractal structure, which creates fractal structures, which creates change of characters. Fractal structure can be identified by a weak break. So a change of character simply indicates the beginning or end of an internal pullback, right? And an internal break of structure indicates the beginning or end of a swing pullback. So this is the diagram that I came up with, that I personally follow in my trading, actually analyzing my trades. This is the diagram that I follow. So as you can see right here, uh, price creates a low, a lower low, a lower low, creating a lower high, right? Then forming a break of structure. So here at number one, you can clearly identify a bearish swing structure, right? So price break structure. So what does this simply means? That this now becomes your strong swing point, right? This becomes your strong swing low right here. So this you can mark out as your lower high, right? So now you jump onto the lower time frame where you can identify your internal break of structure. Or not to confuse you guys, just keep that one time frame in your head, whatever it is, whether it's the 4 hour, the 15 minute, or whatever time frame that you do trade. So now price creates a internal break of structure right there, right? And then looking at number two, what you can identify right here is that after a swing breakout structure, we expect a swing pullback. Because remember, when you identify structure, price always makes a lower low, lower high, a lower low, lower high. So after a breakout structure, price is expected to pull back, right? There's no way that price will just simply move all the way down without pulling back. So as you can see here at number 2, after a swing breakout structure, we expect a swing pullback. So when is that pullback starting? Here you can see that price creates a low, an internal lower low, creating an internal lower high, then break structure, making this your weak internal low and this your strong internal low. So here at number 3, what can you identify now? At number 3, you can clearly see that a bullish change of character. Remember, a change of character signals an internal starting. So as you can see, price created a internal change of character right there. An internal change of character is an early sign that swing pullback may be starting, but it does not confirm. It's not confirmed until a bullish internal break of structure is formed, right? Until this internal break of structure is taken out. So what you can do right here is that now that you know where the market is at, now you can clearly look for buying or selling opportunities in the market. So now, knowing that what you know now in the market, when price comes at where number 4 is located, you have a bullish internal break of structure. So after this change of character, this simply, the change of character, remember, this only signals an internal starting. This only signals an early sign of a swing pullback that may be starting. So after you get your change of character, it breaks structure, which simply means that now this becomes your strong internal swing structure, and this becomes your weak internal swing structure. I hope all these drawings do not confuse you. So here at number 4, you have a bullish internal break of structure. So what does this mean? This simply signals that the swing pullback has started now. This means that your swing pullback has started, that this lower high swing pullback has started. So price break structure, creating a low, a higher low, an internal higher low, internal higher low, right? So price creates an internal higher low, respects some areas of demand right there, and then break structure, making this your your strong internal higher low because it has broken structure. So as price has continuously broken structure into an extreme lower high, you can simply see here by number 5, the swing structure. Remember now, the swing structure right here is bearish. Don't forget that. Your swing structure is bearish. So here at number 5, you can see the swing structure is bearish. So expectation is the strong swing high will not be broken. So this is your expectation, right? After a break of swing structure, this lower high right here is expected to hold, right? This bearish trend is expected to hold, right? This bearish trend is expected to hold. So your expectation when price comes into your extreme level, your expectation is that this lower high is going to hold. So here at number 6, what can we now see? We can now see that a bearish change of character has formed. So what does a change of character signals? A change of character only signals that an early sign that the swing pullback might be ending to form a swing lower high. Remember now, structure moves like this, creating a lower low, breaking structure right here to form a lower low and to create to make this your strong swing structure, right? So we are at number 6. We are there at number 6 right now. So price creates a change of character. So a change of character simply only means the swing pullback might be ending. So now you have an idea that price that this strong lower high or the strong structure is holding, and then price creates a change of character right here. So this simply means that that your strong lower high is going to hold, but it doesn't confirm that as yet. So what you can see here, uh, price then creates this change of character and then breaks your structure. So remember, going back to what you have learned in the previous slide, after a break of structure, this indicates full structural alignment. Remember what I've said in the previous slides. Let me just go back. That after a break of structure, that confirms that a new swing structure is being formed, right? Let me just get back to. So strong highs and lows. Strong lows leads to higher highs. This is not the one that I was looking for. So right here, swing highs is the highest point that leads to a swing low. And a swing low is the lowest point that leads to a swing high. So going back to where we were at this diagram, this was your swing high and it got broken, right? So after a break of structure, a new swing is being formed. So right here, you have your break of structure, price break structure, here at number 7, which simply means a bearish IBOS. Now we have full structural alignment, swing pullback now confirmed as finished. So now after this internal break of structure, you gain more confidence to say that this lower high, that this swing lower high is holding because of this internal break of structure. So after this internal break of structure, here at number 8, your expectation is now that price is ready to target the weak swing low. The strong internal high should be respected until price takes out swing low. Remember, this is your swing low, so your expectation is that the market will take out this swing low here uh because lower highs hold and breaks, and lower highs actually lower highs breaks to target lower lows. This is simply now this is your swing lower high, and this is your swing lower low, right? So this is what you are targeting. So after getting your internal break of structure, you gain confidence, and your expectation now is that after this area of supply right here, then your expectation is that now you can confidently target your lower lows, because you know after a strong lower high, market tends to take out the lower low. So I hope that made sense. I hope that this whole diagram has given you a clear understanding of how we look at market structure here at Bolt FX and how we tend to take our trades here at Bolt FX Academy. So this is just simply what I said in the previous slides and how I've identified my points right there. So you can just write this down and take note out of it. Right. I think we have come to the end of our lesson right here. Oh, sorry. So I think this is the last slide. Internal structure expectation. So when the internal structure is moving up, which is bullish, or down, which is bearish, in the same direction as the swing structure, we expect the internal trend to keep going until it breaks the weaker swing high. That's exactly what I have mentioned. That is exactly what I have mentioned right here. After your internal break of structure, you expect this weak swing structure to be taken out, this lower low to be taken out, right? So if the bullish or bearish internal structure fails to do this and turns the opposite way, bearish or bullish, we expect the new internal trend to continue in the direction until it breaks larger, weaker internal lows. So what that simply means is that imagine now that price has broken structure right there, created an internal lower high, creating a lower low after this break of structure, and then after this, price simply creates a break of structure right here. So now we know that price is tending to go up and it could simply take out this lower high, the swing lower high that we have been talking about in the early slides. So that's simply what it means. I hope that you understood this lesson. I hope that it made sense to you guys. And in conclusion, I would just like to thank you for your attention and participation in today's lesson. We've covered some important concepts, and I hope the material presented has helped you understand the basic market structure. Remember, learning is a journey, and it's critical to keep applying what we have discussed today in practical ways. If you have any questions or need further clarification, feel free to reach out, keep practicing, and let's continue building on what we have learned in the next lesson. Great job, and see you in the next lesson.